Hey, good morning, everyone. Welcome to the Wednesday webinar. Todd Gordon of Trading Analysis. Happy Wednesday. Happy pre-Fed day. We almost hit the right start time. Man, one little thing. I think next week we're going to get it right. But hey, look, the show's coming along. We didn't do it last week. We had a big webinar that we had to prepare for. A lot of big projects, so it was best to kind of set it aside. The market's been a little quiet. I think, obviously there's a lot going on the geopolitical front, a lot going on the monetary policy front. And then obviously with the drone strikes in Saudi Arabia and all the crude oil movement. Got some fun things to talk about here. So first off, how are we looking? Everybody okay? Let me just check in with the team here. Where's go on view on watch page here? Perfect. Okay, perfect. Everything okay, guys? Sound decent? Sound levels okay? I know I look terrible. Bags under the eyes. Our baby girl, man, she's been up like 4 times a night. She won't sleep. She's wonderful, but she won't sleep. Go to bed. She wants to go up and party all night. Let's see what else. Okay, we're good. All right, so let's roll. Futures it's been quiet. It's been a very kind of, I was hoping coming out of August that we'd have a little direction, but it's been a very much a hurry up and wait kind of market. Like every morning when we wake up, like I'm one of those guys, I love waking up and just checking the futures. Like, I don't know. I certainly don't check the futures during the night. I got rid of that when I stopped trading for an FX hedge fund a long time ago, and used to check quotes a couple times a night. And the worst thing was if you had an order in, and I'll get on track here real quickly, but let's talk about if you kind of trade at night or whatever. If we got stopped out of a position, the trade desk would call us to tell us we got stopped out. And of course I was 26 or 28 at the time and lost a bunch of money, and that was like, it was hard to go to sleep after that. So I kind of shed myself of ever checking futures in the middle of the night. Do you guys do that? Let me know if you do or not. I hope you don't. Unless you're swinging size overnight. So futures are down. I'll kind of get on track here. Futures are down just a touch. Let's take a look at the macro. So S&P is down 0.10, NASDAQ same. Here we go. I'm going to move him just a little out of the way. Crude down 1.77, and that's been the big mover. We'll talk about him quite a bit. The RUT is flat, so no big deal. Bonds are coming back here up 0.4. The VIX is off here just a little bit. We're going to talk about some ratios. As I mentioned in the free video last night, there's been some pretty fun ratios happening, and sort of looking at the gold and silver, looking at the ratio of value and growth, which is kind of helping decide where we might want to be trading. All right, but as we always kick off here, let's start with the futures at the top here. The S&P at the top here, and kind of get our foundation. Oh, Lance says he does trade futures overnight. Hey Joe, what's up? Joe, the intern's here. We should get him to guest in from his dorm room. Joe, are you in class? Are you studying, or what are you doing? That's funny. So guys, we're still watching a couple different interpretations in terms of what's going on here on the S&P. We're about 23 points from the all-time highs, which I think is pretty funny considering recession was imminent in August. Yield curve inversion, everyone was screaming for recession, and here we go. We're just boringly trucking our way back towards 3028, which is the all-time highs. Several interpretations that I'm looking at on the wave count, but you know what? When I kind of step back, and I like to do this exercise, where we just step back and kind of take the Elliott wave away, and you say, what's happened? Well, basically, we're unchanged since 2018. We're a little bit above where we were in October of 18. It's been a lot of back and forth, a lot of overlap, and there's several interpretations. There's several ways to look at this particular pattern. The one that we are tracking for now, and I'll show you a couple different possibilities, which, again, I'm not going to get on the soapbox because you guys know I like to do this, but I'm not going to get up here and say, oh, well, Elliott is too subjective because I can't tell you exactly what the future holds. If you can tell me what exactly the future holds, like, I'll sell the business and I'll come work for you, all right? So let me know. But one of the interpretations that I'm looking at is that we do have one more marginal new high here in a C wave that does take us up towards 32 to 3,300. This is based on the idea that the S&P is in a contracting triangle, which it could be. This is what we've been tracking for a while. Still valid. Another possibility that we're looking at is that we are an expanding triangle. And if that's the case, we have one more marginal new high before we drop sharply lower. Yet another one is this possibility that we are in some kind of explosive wave 3 move up with a wave 4 ending here December of 2018. I'll tell you what, all three, you're like, great, Todd, there's 3 different interpretations. Well, all 3 indicate that we should follow this track at least, which is up to around 32 to 3,300. All right, so we have about 300 points of upside to go in the S&P. What happens at this point will be very, very telling, right? If we start to show hesitation, if the internals are weak, if the sector participation is weak, if the macro markets are signaling that we might have, we might struggle to continue to go higher, then we can focus on the 2 prior wave counts that I put in front of you. If, on the other hand, we don't show any lag or any sector ladder sort of rotation that indicate we're going into defensive posture, macro markets are flashing a risk-off signal. If everything looks hunky-dory here at 32, then fine, we can quickly move to this interpretation, which does allow for a much more significant push higher. So that's the way we're playing it. I think we go higher for now, based on all 3 interpretations. You look at the rut, small caps have come back with a vengeance. We have seen a lot of short covering, and the heavily short small caps were not yet through resistance into 1590 to 1600. If we do get through there, I think that's a very good thing. We will then contend in the small cap ruts with the 786 retracement of the drop from August 18 to December 18 as well. If you break, and this is kind of my line in the sand with FIB, this is one of the most important relationships I look at with FIB. Basically, if you break this 786, you're not only going to go to new highs, you'll probably go up to the 1272 extension. And is there anybody out here who wants me to tell you how that math is calculated, where that comes from? I will if you like. Just tell me. Okay. Generally, I find that the 618 retracement is kind of a stop run target. Push through, come back, push through, come back, push through, come back. And here we go on a 4th time. We've got a little downtrend resistance. I think we'll get the 786. Just to tell you, pull out your calculator here. If you do 0.618 square root, you get 0.786. So what that means is if you go from 0.618 up to 786, okay, fine. Pretty good expectation there. You could also do the square root of 1.618 to get 1272. And for some reason, these square roots I find work very well. So what originates at the 786 has a decent shot to go up towards 1895. So, I mean, the rotation back into the heavily shorted sectors, specifically there's been a lot of short covering financials in the small caps, energy in the small caps, more so industrials in the large caps, and these are the sectors that have come back with a vengeance. All right, so let's bring in our team here. Just say hi to the guys. I just wanted to kind of get you started at the Open. Terry and Alex with me as always. Good morning, guys. How you doing?
Morning, Todd.
Hey, Todd.
How you doing?
Morning,
and hey, Alex. And Terry's got is it a tropical depression or is there a hurricane knocking on your door in Texas?
No, it's not a hurricane, just a tropical depression, Imelda. Just kind of formed overnight, I think, in the Gulf, and now it's dumping 15 inches of rain all over southeast Texas. So,
Ugh, 15 inches of rain.
It's an indoor day for sure.
15 inches. That was snow. I think you multiply by 12. What's 15 times 12? It's got to be 140 inches of snow.
Yes, a bunch.
Alex, what's going on with you?
First day of the rains here in Serbia as well. So I guess autumn is knocking on the door.
What do you mean the first day of the rains? This is like the rain season?
No, it's autumn is starting. So we didn't have rain for quite a bit.
Oh, I'm sorry.
Sunny and
I started thinking of Toto's song, Send the Rains to Serbia. Oh, I'm not going to say. Oh, boy. I suck at singing.
Yeah, we have focusing on a Fed meeting today. Some movements in altcoins, in cryptos.
Oh, really?
Yeah.
All right, cool. We'll bring in on that.
This is interesting. I think we potentially bottomed on a larger time scale on altcoins. So interesting developments are starting there.
Perfect. I can't wait to see that. What was going on the FX side with the ECB? Have we seen any movement, or the euro still like borderline about to be delisted and going to the pink sheets?
I like that formulation. Yeah, nope. Actually, euro went up, and I think we are going to be in a midterm correction because Draghi explicitly said that the governing council is almost leaving the rest of the stimulus to the fiscal side. Mm-hmm. So basically, market
he's passing the buck or passing the euro.
Yeah, but I mean, he said actually ECB is not going to do anything anymore.
Wow. All right. Just all right. Perfect. Let's. We're definitely bringing you in, and I want to get that piece of analysis on the cryptos as well as the FX. And we have the Fed tomorrow. I mean, they're going to cut 25 basis points. We'll see what they do. Are
they? Have you looked at the CME tool? It changed from just a week ago.
All right. I tell you what. Will you bring it up?
87%.
It's 87%. Okay. All right.
No, it was 87%. Now it's 58%.
For when? For tomorrow?
Yeah. You need to pull the CME tool up and look at it. It's crazy.
All right.
That's what I'm saying. I don't know what happened. It looked like all of a sudden uncertainty popped into the market. So it's almost 50-50 as to whether they're going to cut a quarter point.
Hold on.
So I saw that. John Crypto saw that this morning, posted it on the Facebook group.
All right, hang on. Let me pull this in. I'm going to lose your voice just for one sec, guys, because there's one screen that's not properly enabled. So let me just check this. Okay, so what we're going to do, this is a good little tool here, guys. CME, Fed Fund Futures, or is it the CME Watch tool? All right, so if we go up here, okay, so this is the 18th meeting. They're going to announce tomorrow. Oh, it's almost fib, 61.8. It's almost 38.2 to 61.8. Just the numbers are reversed. So there's only a 60% chance that they cut tomorrow. That's interesting. Look at that, guys. That's a pretty big move. I mean, it must have been when they released strategic oil reserves. Well, that's interesting. Good point there. I mean, what do you guys think?
Well, I don't know.
What do you guys think?
It could have been related to that.
I mean, you know what, and I actually have something I do want to talk about, talking about the intermarket relationships, which, by the way, John Murphy, you want to talk about intermarket relationships, I mean, he's the technical analysis godfather for intermarket analysis, and I love John Murphy. Reading this book was amazing, and there was, looking at the headline of the Wall Street Journal yesterday, crude prices surge after Saudi strikes, and it just hit to me. I was like, oh, I remember reading about this, watching about the intermarket relationships of crude, bonds, gold, and stocks heading into the first Gulf War in 1991. So I have some screenshots set aside for you guys to kind of show you the intermarket play. So friendly reminder, if you guys haven't read this book, read it. It's awesome. If you want to, there's a lot of people who try to do intermarket analysis, and I mean, I can't say enough good things about him. All right, So let's go back in. I'm just going to do a little bit more stock market stuff, guys, if that's all right. Hey, if you're watching, let YouTube know you appreciate it. If you don't think we're a bunch of goofballs, and hit that thumbs up button. Let us know that, let YouTube know that more people should see this content, if you don't mind. And let's go in and do some of that macro stuff I was talking about. I tell you what. Yep, Alex and Terry, I'll be right back with you guys on this, and we'll check back in here in just a sec. Okay, so let's take a look at bonds and gold here. Actually, you know what? Let's just go to crude here. So crude oil, it's interesting. We had a big kind of gap up here on the news of the drone strikes. 63 futures were up like 20% overnight in the Globex session. Closed about half of the gap down to 58. I think the crude oil chart is actually a little challenging to count. I don't love it. It's not one of my favorite charts, but let me just throw kind of a wild one at you, and just like like, oh, what the heck chart. What if it was blue 1, blue 2, big blue 3, WX, triangle Y, the gap up following the drone strikes on the Saudi reserves was E of a triangle, and we're about to sell off. Wouldn't that be the biggest gotcha move ever? I just don't like this whole Elliott wave structure. It's 3 waves up, and then you could certainly argue we're going into a triangle. I have a really hard time saying this is bullish. Okay, I'm not going to short it, because there is a slightly different possibility that we have a much bigger triangle coming in crude, and this is just an ABC up, maybe have one more little push up. Crude for me, I don't have a good feeling on it, and I don't know where we are. I'm not going to force it. No idea. We'll see what happens when we come back to this broken trend line that acted as resistance, which now should serve as support around the 57. If we do get another push up, it could just be a B wave, but again, I don't see anything that's very constructive here. I think we are probably morbidly range bound between 70 and 50 for years to come in crude. The best I can tell from that count. I appreciate, I got a lot of nice feedback 2 weeks ago, the last time we did the show. I did give you the sleeper sector, XLE, and that thing worked out perfectly. I think it was, so it was 2 weeks ago, 918, so it was 94 when we gave you that, and 94 was right here at 57, and XLE went right up to 62, and I'm pretty sure it outpaced almost everything, possibly even including even the financials. It was just a point that it was just this intermarket non-confirmation in August, and I think this is important. It ties back to a trade that we got stopped out on, which was emerging markets. I talked about it on CNBC. I was very vocal about it. I was like, guys, I am short this into this move right here. EEMs, the emerging markets, which obviously has a good commodity tie, and it just was not breaking down. And what I'll do is go like this, add study, instrument overlay. I'll just throw the SPY on top of it. While the SPY is breaking down because of how weak emerging markets in this kind of deflationary play, EEM should have been a good short. Well, if you overlay the S&P, let me just do my best to do this here. Okay. It was this day right here, okay, on September 4th, where the EEM broke this October range, or sorry, this August range, where the S&P had not yet broken the range. So you have emerging markets, you also had China, FXI, you also had crude and energy showing a little bit more relative strength to the S&P, relative to the S&P. So I said, what is going on there? So I took my loss in the EEM, which was a hedge to a shorter term portfolio, and that was sort of the beginnings of this move higher, right? So it was interesting. We've just seen a pretty big change, and I think emerging markets, was the heads up that energy and the other beaten down sectors were going to come into a period of short squeeze and catch up on the upside. All right, so that being said, let's talk about bonds. I think bonds are to the point where support is here. I do think we have A, I think we have B, C, D, and E. I'm happy to say, guys, I did lock in. I think I got the low in mortgage, so I used this Elliott wave chart to lock in my 30-year rate on my house. I got it at TD Bank, actually. I did it on August 26th, which is right here. No, 27th, which is right here. It was right into a nice wave 5 of 3 move, and you could even see inside of wave 5 a beautiful 5-wave move itself. So you had like multiple confirmations of those 5 of 3. I didn't short bonds, but I did lock in my mortgage rate. So hey, there is other usefulness of Elliott wave besides that. So I think we are heading into a 4th wave correction that is of the same degree as this wave 2 correction here. I've done a 4v2 time study. The amount of times that wave 2 lasted in wave, the duration of wave 2 will be equal to wave 4 on October 22nd, and 161% would take you out towards Thanksgiving. So I think some butterflies are in order in TLT. This is one of one of my favorite trades. I don't love to trend trade the bonds. I do like to do sideways butterflies. So let me just kind of set one trade up. I'll show you what we might be doing here with our members. So I'll just overlay TLT. It's not a perfect overlay with 30-year bonds, but it's pretty close. So if TLT is going to be around like the 144 area for like the next couple months, a way you can play that is this, and my members who've been with me have seen many of these trades. So you go TLT, you could go out to October. Let me look at that time study. So it's even November. We could do, boy, that'd be a big one. Yeah, I don't want to go all the way to November expiration. We could do it. So November monthly is 58 days out. You could do it around the 144, 142, kind of centered around 142. You can do it either side, puts or calls, doesn't matter. On the butterflies, you can go right click, buy, butterfly, 142. Andy, you know what I'm, huh?
Chart.
Oh, thank you very much. Sorry, guys. Okay. Andy just reminded me. I also thought we got to put disclaimer up as we're doing live trades ahead of the show.
Bingo.
142, sorry about that, guys. 142 will kick down. Let's see what this looks like. If we go down $3, 42 to 39, and then 42 up to 45. So selling 2 of the 142s, buying 1 of the 139s and 1 of the 145s. If you analyze the trade, you have the butterfly, the classic butterfly approach, butterfly construction. You've got max loss of 44 below 139 and $44 above $145. Max profit would be at the body at a price of 142, which would be $254. So you're risking 44 to make 254. You're not looking for a pin. Sometimes you can get it, but not often. So we're just looking to collect some of this as time erodes inside of here. Trying to get somewhere up in there. That actually, I don't like the way that one's behaving. That's a little far out. Let's bring it in just a little bit. November 1s. Yeah, that's looking a little better in there. I would do the November 1s on the 39, 42, 45. And again, what you're trying to do is you're trying to capture this range right here. Trying to capture on TLT between 142 and 143. I kind of like that trade, okay? Sorry about that chart thing, guys. Once the show finally comes out of beta, we won't be making those stupid mistakes. All right, so another setup that we like to do is let's take a look at gold. I do think gold's starting to move down into support. We're at 1513 here. I don't like the setup as much as bonds. I do see us as a 5-wave move here. Gold has pulled back in wave 4 to the area of the prior 4th. and looking to push higher. So I do like gold. I also do like silver. I do like silver. We've begun to see a little bit of response from an ABC low here. I'm wondering if we might have a little bit of a B wave bounce up here in silver to continue sideways. Now, if you're looking to do silver or gold, let's look at this silver-gold ratio. And we talked about this last week, 2 weeks ago, excuse me. If you go out far in time, okay, silver, gold. Let me get rid of the S&P now. You'll see on the silver, what we're doing here again is we're taking gold and we're putting it into silver. So the ratio is going to be, if this chart is going up, gold is outperforming silver. Generally, that's a risk-off sign. Gold is viewed as just as a precious metal. Silver is a precious but also an industrial metal. If the demand for gold outpaces that for silver, generally they say it's risk-off. It used to work a lot better until we went into this era of quantitative easing, which kind of changed the relationships. But the ratio where the gold-silver ratio was overheated is up around the 80 level. Happened in 2003, happened in 2008, 2014, 2016, and we just blew through it. So what they're saying here is gold is massively overvalued relative to silver. I find it interesting that we just pulled back here on the monthly chart towards this old resistance level. If we were to somehow break below the 80 level, I think that's very, very risk. That's a bad situation for gold, good for silver. It doesn't mean gold sells off and silver rallies. It means that silver could rally at a faster rate than gold, especially if we get back through this 80 level of gold-silver ratio. So again, revisiting the silver chart, we could have a lot more to go here in silver. If you look how far off the highs we are in silver, I mean, we're not even through these old June 2016 highs where gold is through those highs. So don't give up on silver. I am looking to buy pullbacks here in SLV for our longer term portfolio. You might have to sit through some back and forth here for a couple months before we eventually head up towards above those $22 levels. Okay, so I'll tell you what, I'm going to leave it, I'm going to send it over to Alex and Terry. I want Alex to update us on the crypto side quickly and the FX side. And then I'm going to come back and finish up with the intermarket stuff, kind of show you what happened back in the two Gulf Wars, where we are now, where that might give us a heads up for crude, and we'll leave it there. Alex, you ready?
Yep.
Okay, perfect. So, are you sharing your screen?
Yep.
Okay, perfect. And you're off. Go right ahead. Oh. Nope, don't do it yet. Don't do it yet. 1 second. Don't do it yet. Alex call. Position 2 and 10 seconds. And you're good. Take it away.
Sure. Okay. So on crypto side, we are looking for this dominance chart, which basically explains the ratio between the Bitcoin and the rest of the crypto space. And we have a pretty nice wave counts here, which is actually manifesting in the quotes on the crypto side. So Bitcoin is moving lower and sideways, while this ratio is moving lower, and the rest of the alts are going up. So it's pretty nice representative of the relation, and we had Bitcoin moving upside, while we had a wave 1, 2, 3, 4, and I think we have just a small pullback here, and Bitcoin will gonna go a little bit more upside, and then the alts will even outperform more. So it's gonna be really interesting. So on charts, we are seeing here, I still have this thing as a triangle. We as you know, we track several wave counts. I'm still looking for a little bit more upside before a pullback, But look, Ethereum. Ethereum is very clean. So after this move lower, we have this as a wave 1, 2, 3, 4, and 5. And it seems that corrective pullback is finished. We came down to 61.8, some nice internal ratios. And from there, as per dominance chart, Ethereum has a very nice impulsive structure on the upside. And we don't have any overlaps. On a smaller time frame, this is clearly impulsive. So we are waiting this actually wave, higher time frame wave 1 to finish. And then we're going to look for a pullback to get on this board for the next, I guess, 6 months, because we are seeing that we are in a possible wave 3, 4, and 5 in Ethereum. Also, if you look some Stellar, which made 15% rise, I'm going to show you Stellar, which had a massive move on the upside. So let's just pull out the Stellar here. So look at the rise on a 3-hour chart, on a daily chart even. It's really showing some signs of a life. And on a weekly chart, we have this as a 5-wave move completed. Correction is over, and Stellar is gonna skyrocketing. But of course, since we are planning to plan long-term trades on these ones, we're gonna wait confirmation above this channel trend line, pullback, and then we're gonna go for it. Also, Ripple is trying to picking up some lows here as well. So nice move on the upside on the larger time frame. So we are starting to see 5-wave move up and a pullback, and we are ready to go on the upside. The other cryptos like Litecoin as well, most likely posed longer term lows. I have also wave count, which says we're going to do one more small push down and then we go off. But this is not enough to conclude for Litecoin that we actually punched the lows. But some of them are, as I showed you, looks really interesting. This Dash also made a very nice pullback from the beginning of this. So we have a wave 1, 2, 3, 4, and 5. WXY pullback to 786, potentially finished. We are waiting for confirmation. And also we have this Monero made a really nice pullback. Let me just find it here. Okay, Monero is also in a situation with another push lower, or we're going to rip higher after the confirmation here. So a little bit of mismatch between Bitcoin and other cryptos now, as per these dominance charts that I showed you. So altcoins are moving abruptly upside, and Bitcoin is moving sideways. And I think this is going to stay until we come down to this support level, and then Bitcoin will take over for one more push on the upside. So really interesting relation, and this dominance charts is really displaying what's going on the real markets, following this relation between the Bitcoin and altcoins, which you can see here. The dominance is falling down, Bitcoin sideways, alts are up. So what is going to happen when we see the 5 waves up in a Bitcoin, and we're going to expect a big ABC down? So altcoins, it's much going to go skyrocketing there. So we're gonna prepare for this and buy some altcoins when we see this 5-wave highs, if we have a bullish confirmation.
That's so interesting. That's good. That's good work, Alex.
Yeah. Would you like me to switch on FX?
Yeah. Switch over to FX. You just hit them with a lot of good information there. Good work.
Yeah. On euro dollar, I'm looking for a short-term pullback. I have worked a lot of the wave counts during the weekends, and all I see on many emerging market currencies, as well as on some wave counts on euro, is that actually the move up in dollar is not finished. So, for example, if we look this Turkish dollar chart, which is kind of a very telling of what might happen in the near future, we see a beautiful 5-wave move up, which is developing. Wave 1 and 2, nice correction, very discernible 5 waves up in wave 3. As you can see, we always want to see that. Pullback in a wave 4. And actually, I think we are in a triangle consolidation in the orange wave 4, and we're going to go up in dollar against the Turkish lira, which is pretty doubling in price. So that's a huge move in dollar on the upside. The same thing I see in a dollar ZAR, which is the South African rand.
Yep.
So I see also a developing structure which implies on weekly we're going to have one more push up in dollar. So for me, the dollar bull market is still not over. And therefore, I was looking for this euro-dollar weekly chart. I'm just looking for a pullback. And then I think we're going to go to 120, 118, 120 mark. Extreme will be this 1.3 levels. This is a little bit different structure. We're going to go down from 2008 in A, B, C, D, E, triangle in B, and C down for W, which actually matched 100% equality A to C.
That kind of is interesting.
Yeah, we
I was
go
gonna say, don't look at
ABC
that.
up in A.
Don't look at what, Terry?
Sorry.
Oh, that time scale in motive wave just switched. It was.
Oh, okay.
Sometimes there's a little bug in there, and it was the dates were wrong, but they look okay now. Just as I started to say something. Sorry about that interruption.
Okay.
Yeah, I'm looking here for another move up in X. So we have a 3 waves up in A, 3 waves down in B, 5 waves up in C, which gives us a completed wave A. We have an ABC down completed, 5 waves down in A, up in B, ending diagonal in C. And now we are developing in a 5-wave move up for the wave X. And then we're going to go down in an ABC to finalize this move down in euro.
That'd be a huge... Just to put that in context, you're talking about a 20-figure move in euro over the next 2 years. That's a big drop in the dollar, traders, right?
Yeah.
So what does that mean? If the dollar drops, I mean, you got to think that's a good thing. Generally, lower dollar is good for equities. That gold and silver, inflation, you know, that kind of ties into the silver story. It's going to help the materials. It's going to help the emerging markets. Kind of what we opened the live stream here with is this sector rotation is kind of confirming what I see there in Alex's work in euro. So keep going. Let's finish up. We're getting a little tight now, Alex.
I'm going to be just on this wave count a little bit more conservative. It's a different one. We have an ABC for W, X, ABC for Y, and then another flat in X, and we are working the Z wave, which is also possible, but both counts points higher to at least 118, 120, which actually agrees that Lagarde, which is the new ECB president, is going to start pushing on a fiscal side, and we are not going to be seeing anything soon from the ECB on the monetary side in the next period.
No more QE.
So also we have a nice wave count on dollar index, which you have on your IQ feed with the ending diagonal.
Yep.
So the things are starting to line up slowly, and if you can see internals of the euro, we have a nice 5 waves up from the lows. Very nice flat down, which didn't invalidate the wave count, and then we have a wave up in 1, flat in B, which is done, and now we are working possibly on a Fed 1, 2, 3, 4, 5. So
wow, that's a big move.
I mean, here, yeah, and the wave counts kind of agree. I just want to show you one more thing. This is
do it quick. We got to wrap it up, Alex. Do it quick.
Okay, dollar yen chart. I'm still looking for this. Triangle to complete and move lower, which also agrees on the lower yields and rate cut from Fed to 97, 96 levels. So that's kind of explaining a lot of macro picture in that 2 charts.
Got it. Perfect. Thanks for that. That's good work. Alex he heads up our crypto and foreign exchange service. So if you go to tradeanalysis.com, you want obviously a lot of information on the Forex and the crypto side. Go check out Alex. Okay, good work there. All right, guys, so let's talk about, let's just check the futures here again. They're coming off here a little bit, 4 minutes ahead of the open. We're down just a couple points, no big deal here. And what I said is I wanted to finish with And I see a couple of requests. Yes, I'll take a look at Apple for you, William. The one thing I wanted to show you was I took a couple screenshots from this book, and I just wanted to kind of go into this a little bit, which I find to be very interesting. Let me just put it above our heads. So this is how crude and gold were behaving heading into when Iraq, when they first invaded Kuwait. And obviously we hopefully we're not at the start of another kind of third Gulf War. But there's some kind of parallels that are happening here with the intermarket, the macro forces that are eerily similar. So we've got Iraq invading Kuwait, and you saw crude go from 20 up to 40. It doubled from August to October. I think then the U.S. entered, and I remember sitting in my parents' kitchen listening to it. I was 12 or 11
Hey,
at the
Todd,
time.
I was over there.
You were there.
I was there. I had to go. That was my foreign assignment. I was headed off to Saudi Arabia.
Oh my God.
And everything, all our papers, everything was ready. All our stuff was sold and moved, put in storage, and I was about to get on the plane. And August 2nd, Saddam invades Kuwait, and I was like, hold on, wait. Now, so I had to sit back in limbo for a few weeks until they figured out that it's only over there in Kuwait. You can still go to the West Coast on the Red Sea side, so they let me go. So, but anyway, I was over there from
that's wild
all during that time period, and it was quite tense. But I actually got to fly home, I think in January. I think I was back home in January. So I was sitting just like you. I was actually sitting back at home in my parents' house.
Oh, okay.
The day the war broke out. But
and
then
there's no visuals. All we could. We got ahead of the open. Well, I want to hear this.
I had to go back over there while that war was going on. So I was like, oh my gosh.
That's scary. That's scary. Yeah. You remember you can listen to the bombs dropping. You could listen. You couldn't. I don't think they had visuals at the time. But anyway,
so the shock and awe. Yeah.
Yeah. So let's pull it together. So point is, guys, is when the bombs actually started flying. If this thing continues to escalate, that was a complete sell the oil news right there. So as soon as the bomb started flying, crude sold off, gold sold off, and which is interesting. It's just this idea that the theme that we've been seeing over the last 2 weeks, 3 weeks, and actually even before that, in the beginning of August, was we were seeing strength in energy, we were seeing strength in emerging markets. It began to kind of push up. Then we've got the news that obviously Saudi was attacked, oil exploded, but that non-confirmation of energy and commodity-related currencies in a supposed deflationary environment was already happening. And is it coincidence that, I'm not going to say we knew these attacks were going to happen, but the markets put themselves in a position to respond, to have the media look at a news event and say, oh, that's the only reason that crude and energy have been strong. No, they've been strong for weeks ahead of time. So there's some very interesting forces happening here. So that's the first one I wanted to show you, and then let me bring over gold. We should have the stock market in here as well. So the dollar was selling off heading into when Iraq invaded Kuwait. The dollar was selling off, and what was interesting here is this was a different intermarket relationship of bonds and stocks. Prior to 1997, when we really started to understand the deflationary forces that were in play from long-term capital management, and then it was more so Asian currency crisis, deflation switched the relationships of stocks and bonds. In the past, stocks and bonds traded together, which meant interest rates and stocks traded inverse. That has switched. That has changed. So you actually saw stocks and bonds fall together in the invasion of Kuwait from Iraq. So stocks sold off sharply. Then we came back. The war began, a beautiful inverse head and shoulder, and the Dow exploded higher. What happened here in the bonds? Same thing. The bonds didn't explode higher, but certainly began to move higher. The dollar sold off for a while, but then the dollar was bought very quickly once the war began. So we'll see if this thing escalates. It looks like, you know, things have calmed down a whole bunch from that. So I don't know. This is perhaps a little. Let me just go over here to this one. That one doesn't want to work, does it? Perhaps things have slowed down a little bit. I don't know. There's a bug in this software. It does. Let me just go back to this normal thing. Alex and Terry, let me just say goodbye to you guys real quick. My thing is bugging out. I don't know. It does this every week. So, Alex and Terry, good work. I appreciate you guys being on.
Yes, sir.
See you guys next week.
Okay. So, you know, again, hopefully this thing doesn't escalate, but it seems like everything has calmed down a whole bunch. I mean, it was looking a little sticky there, so I think it's important to watch our macro forces, and there were some interesting forces that were happening before the attack in Saudi, and now we'll just keep an eye on. But, you know, there's been great movement in the commodities, silver and gold and bonds. We'll see what kind of impact there is, but point is, the last couple of days we've seen rotation back into the dividend payers. I just wanted to finish with this chart right here. It's all related to this macro picture, which I think is lower rates. I think yields are going to continue to go lower. I think we are probably late stage in this economic expansion. I think the grab for value is going to continue to outpace that for growth. And if you look at this relationship right here, which I teased on the video last night, this is iShares growth to value ratio. And of course we're going to do a wave count on it, right? So let me just bring this over. What you can see here is this is a daily chart. It's actually a weekly chart of iShares growth to value. If the chart's moving up, growth is outpacing value. If the chart's moving down, growth is underperforming value. Value is outperforming growth. I don't see how this isn't a wave 3 push up. We're into the typical wave 3 upside projections. It looks like it wants to continue to fall, which means value should continue to do better. So that's energy, that's staples, that's financials, that's to a lesser extent industrials. So as much as you want to get involved in some of the high beta tech and consumer discretionary names, it might not be the time for it. I had a quick request for Apple. Apple, I like the looks of it, so I'll take a look very quickly. We're up today in a down tape, which looks nice. This is a highly functified wave count of Apple. It's funky, and I've been telling you guys, I don't know what is happening with this thing, but best I can tell, and it's weird, is a corrective W, X, triangle Y, and wave 4 is over. Wave 4, that blue 4, squares up with this big bad blue 2 back here in 2015 and 16. I think the correction might be over in Apple. I'm a little underexposed in Apple, and with just a little bit more confirmation, I will add a little bit more Apple to my portfolio here on the upside. Okay. So we are still maintaining an option portfolio at Trading Analysis. We are managing our longer term portfolio. The goal is to kind of meld the two, where we are dealing with our stock portfolios but doing option overlays on top of it, doing covered calls and maybe some collars and stuff like that. So there will be short-term option plays when we see the ability, see the opportunity where we can generate alpha, but also do those option overlays. So check us out if you haven't already at Trading Analysis, tradinganalysis.com. You guys know where to find us. Throw a thumbs up there on this on the YouTube window if you're watching after the fact or now. Let YouTube know that you appreciate it. And I think we hit everyone. All right, guys, have a great rest of the week. And members, we'll see you in 25 minutes in the members webinar. Take care. See you guys. See you next week. And we'll have a special guest next week. See you guys.